Hello, everyone. This is Zak Gardezy. I'm the host of Money Minutes. I'm also the managing partner of Wealthstone Private Wealth Management. On Money Minutes, I like to share with you some of the latest market headlines and my outlook for what's ahead. So let's get right into it. We've got a really important inflation report coming out on Wednesday. This is the CPI Report, the Consumer Price Index. So this report helps track the change of price of goods and services across the United States. And so the Federal Reserve and the market looks at this report to determine where's inflation heading. Is it going up? Is it going down? Can we form any sort of inferences from this data? As you remember, we're coming off the heels of a really good jobs report, which showed a cooling in the labor market finally. And so this inflation report coming out on Wednesday is going to be critical as the Federal Reserve looks to figure out when or if they'll even cut interest rates this year. The investors across the market will look at this report to gauge whether or not this recent increase in the market is something that will be sustainable. Just to give some highlights about what's happening in the market, the S&P 500 is up over 10% year to date. The NASDAQ is up 10.99, we'll call it 11% year to date. And the Dow Jones is up 4.5% year to date. So all three major indexes are nearing their all-time highs. So this report on Wednesday is going to be really important as far as A, giving confidence to whether or not what's happening with inflation is going to continue, and also B, giving us a sense of direction as to what the Federal Reserve may do when it comes to interest rate cuts. There's been a lot of speculation around, maybe not cutting rates this year. I've even heard some things about raising interest rates. I mean, there's a lot of confusion about what's going on with inflation and conversely what the Federal Reserve will do. So Wednesday's report will really help clear some things up. Analysts are expecting a pretty moderate decrease in inflation increase month over month. So you could expect potentially the CPI report to at least show a bit of cooling month over month. Now, again, these are just analysts' expectations. The numbers won't be released until Wednesday, so we'll be paying close attention to that. I wanted to provide an update on earnings. So Home Depot reports today. Analysts are expecting a revenue decline year over year for Home Depot. Now, Home Depot's earnings are important because they give us a glimpse as to how the real estate market is doing. Additionally, they give us some data about inflation as well. Walmart reports on Thursday. Walmart's one of the largest employers across the country. And also, they sell basically everything. So when we talk about inflation, Walmart's numbers are also something to pay attention to. And analysts are expecting Walmart to have a year-over-year increase in revenues. So some valuable data points to pay attention to from an earnings perspective this week. I also wanted to share with you some of FactSet's latest earnings data. So 92% of S&P 500 companies have reported as of May 10th. 78% of those companies have reported a positive earnings per share surprise. 59% have reported a positive revenue surprise. And for quarter one of 2024, if the quarter ends the way it's going now, the annual growth rate in earnings would be approximately 5.4%. This would be the highest since quarter two of 2022. But guidance has been pretty weak for quarter two of 2024. 51 S&P 500 companies have reported negative earnings per share guidance, and 36 have reported positive. And I thought what would be interesting would be to take a look at last year at a similar time, because last year was a great year for the markets. But we also had inflation issues then. So I just wanted to see what were the earnings insights then and compare. And so looking at May 5th, 2023, at this point last year, 85% of S&P 500 companies had reported. 79% of those companies reported a positive earnings per share surprise, and 75% reported a positive revenue surprise. Now, interestingly, earnings actually declined at this quarter last year, and guidance was also weak. So 44 S&P 500 companies issued negative guidance, and 35 issued positive guidance. The forward 12-month PE ratio was slightly lower than the 5-year average, but above the 10-year average. So when you look at those numbers, it's really interesting kind of comparing, and I don't want to by any means say, if we look at last year's earnings insight and look at this year as a gauge as to how the year will end this year, it's a very different year this year, as we know. But last year was a good year, and I thought it'd be interesting to compare those two reports. And so, as we wrap up the rest of the week, there's some important data from CPI to earnings to pay attention to, and we've still got Nvidia's earnings later this month as well. So, lots of things to pay attention to. As always, if you have any questions, please don't hesitate to reach out. And thank you so much for tuning in.